Welcome back, everyone. This is the Ulti portfolio update, really the weekly wrap. It was a pretty good week for Ulti overall. We're going to get into a lot of things today. We've got charts, we've got the winners and losers. There were some huge winners. We'll talk about HIMS, that went down 9% today. We will talk about the Opendoor trades, Figma trades, and the Lucid trade as well, because there was movement in each one of those new positions, new options contracts opened up. All good stuff, so let's get right into it. And let's start with an Ulti chart from the week. I'm using Seeking Alpha now because I think it's a little bit visually better than TradingView for presenting. So right now we're just looking at the price return for the last 5 days of Ulti. Ulti is in the blue and QQQ, the NASDAQ ETF, is in the orange. And we can see that over the last 5 days, the NASDAQ was up 0.59%, Ulti was up 0.09% in price. But if we switch that to total return, which will include the Ulti distribution, we get this, which is nice to see. NASDAQ didn't pay a distribution, so their return remains the same. But Ulti up 1.78% on the week with that distribution. So not only were they positive with the distribution, but positive on the NAV by itself, which was good. And now let's turn to one of my favorite subjects, which is the quantum computing stocks. QUBT up 23.22%, up 13.16%. Huge moves. I think there were two causes for this from what I could pinpoint. Number one was that this business here, Ascendient Capital Markets, they basically put a 1-year price target on QUBT, quantum computing, from $22 per share to $40. It currently trades at $24, so that probably lifted spirits there. But the big news on the day was this, and this is basically an article from Novo Holdings, which I believe is a division of Novo Nordisk, a Danish pharmaceutical company. And the too long didn't read summary here is that Denmark is investing in quantum computing. So what we see here is that there's a new fund, a private fund, not a public fund. This is a fund where you have to be very, very rich, what's called a qualified purchaser. So not just an accredited investor, but a qualified purchaser, someone with at least $5 million in liquid net worth to invest. 55 North is the name of the fund, and they're a dedicated quantum fund. They're going to be investing in quantum computing companies, and they closed about 300 million euros in their first round for Fund 1. And of that, Novo Holdings put in 134 million alongside Denmark's Export and Investment Fund, which I think might be some sort of Danish government entity. But basically, this quantum computing private fund has raised about 300 million to go out and make investments in quantum computing. And at least in terms of public markets, they could be doing that in Rigetti or quantum computing, maybe IonQ as well. So lots of bullishness in this quantum computing space. Unfortunately, Ulti did have to sell some of Rigetti. They sold about 1 million shares. If we look at the trades from today, RGTI, 1 million shares at $38.97. Something might have been called away. They might have got assigned one of their covered calls because it might have just blown through it. I'm not 100% sure, but they did sell and trim their position. So they have now 145 million. But that's still a large number. What else did I talk? Oh, Rocket Lab. Rocket Lab was up 7% today. A pretty darn good move in Rocket Lab. Again, as I've said before, Rocket Lab is a news-driven stock. If there's no news, I think people lose interest and sell. If there is news, it gets bought up. And the news was just this Wall Street Journal article probably, which is self-taught engineer going head-to-head with Elon Musk and Jeff Bezos. And the self-taught engineer is the CEO of Rocket Lab, Peter Beck. So that's could be what drove up Rocket Lab. Maybe some traders saw this or retail investors saw this article. They thought, okay, cool, Rocket Lab, I'll go buy it. That's my speculation. Now, the losers for today, Palantir and Hims and Hers. Let's talk first about Hims. I think there were two pieces of news that drove this stock down. the news was that this law firm here, Berger Montague, is investigating the HIMS company for potential breach of fiduciary duties, or I guess they're investigating the board of directors on there. Has something to do with, again, Novo Nordisk in the news, a termination of partnership between Novo Nordisk and HIMS. I'm not fully versed up on that story, but I think the markets reacted to a law firm potentially suing HIMS or a class action lawsuit going against HIMS. So that's one piece of news. The other was just what we talked about yesterday, which was that the COO, who'd only been there for 5 months, was stepping away from that role. I don't know if they call it stepping down or stepping up, but leaving that role and going on to into an advisory role. And then an internal employee, Mike Chi, is going to be the new COO. And this comment from this ex-user really summed it up well, where he said, a COO losing their role within 5 months of their hiring isn't a good look. Setting up a new advisory role is how you fire someone without spooking the streets. Let's hope the street doesn't see right through it. What's going on at HIMS? So it could be the markets responding to this comment from the CEO of HIMS in a negative way, just that there's executive shuffling going around, and that's unsettling to the markets. So moving on to Palantir and why it was down 7.47% today. This article summed it up nicely, where basically an Army memo said there were security flaws and risks with the battlefield communication system that Palantir had provided to the Army, and Palantir refuted that, but not before the stock had time to react and go down about 7% on the day. And so here's just a little bit from the article. It says, the Army Chief Technology Officer described the next generation command and control prototype, and the keyword here is prototype, as riddled with structural flaws, including uncontrolled user data access and unassessed third-party code. And Palantir rebutted, and they said, quote, as the Army's Chief Information Officer stated publicly, the security review process during the experimental phase of NGC2 functioned as designed, with finding mitigated immediately prior to field integration with the first division level event, which proceeded successfully without delay. So I think what happened here was the Army got a prototype version of the Palantir software. The Army tested it out, weren't satisfied, informed Palantir, and they maybe made some modifications or enhanced the prototype. It got used again and it worked, or at least that's what Palantir's side of the story seems to be. The Army hasn't come back and rebutted that, but it was just from this one memo. So basically, this memo is why Palantir is down 7% today. Now, Ulti was pretty much flat on the day, but their AUM did decrease. About 1% of all shares were sold today, around 6 million or so. So while the AUM decreased, so there's less money under management, remember that doesn't decrease the price because it's an ETF. And then with ETFs, the price of the ETF is determined by the underlying securities within it. So although Ulti's AUM decreased, the price was still relatively flat. Stock gains, they had about 46 million. Net losses were about 5.6 million. They did spend a lot today on options trades, which we'll get into now. So looking at the Opendoor trade, I'm going to highlight the trades that they put on today in yellow. And we see that these puts here, and they sold them for a penny per share, which is not great. These were the October 3rd puts at $7.50. Let me see if I can find that put that they bought. Yep, right there. I'm going to highlight that one in yellow. So they bought this put on September 24th, expiring October 3rd, for the right to sell Opendoor at $7.50. They bought 25,000 of those at 58 cents for a total of $1.45 million. They had to sell that back, and they sold it for a penny, so they pretty much took a huge options trade loss there. Same story here with this put that I'm now going to highlight in green. This was not a good trade either. They basically bought a $8 put expiring on the 3rd, 60,000 contracts, 38 cents per share. We'll see it right here in green in just a moment. Right there, there's the $8 put expiring on October 3rd. they bought it and then they sold it. So they basically closed out the position again for a penny. So not great options trades there, but we see these ones here at the very bottom. Let me clean up my highlights. Give me a moment. These trades here at the very bottom are new ones that are going to be expiring next week. The net of these is 925,000, and we will see that they sold some covered calls and also bought some puts as well. The covered calls all are at $9, and the puts are at $7.50 and $8. So what that means is today they got basically a net credit of 390,000, bringing their total net credit up to 9.8 million. The loss right now is running at 13.9 million because Opendoor's trading at 811. Their average price is 975. So their P&L is shrinking. It used to be around 5 million. Now it's only 4.4 million, helped by Opendoor going up a bit and by net change in their options credit. So that's good to see. Figma as well. Let's talk about Figma. It was 4 new trades here. They closed out a covered call right there, and that was an expensive one. The new trades today cost them 672,000. So they closed this covered call here. Let's do another highlight round. Highlight that in yellow, and this was the call that they had sold. So on October 1st, they sold a call at the $54 strike price. 6,000 contracts, sold it for $1.10, collected 660,000. They had to buy it back because if you look at the current Figma price right here, $53, it's approaching that. $53 is getting close to $54, and they don't want their shares called away. So they bought it back, but they bought it back at $1.88 instead. So they bought it back for more than they paid for. So that's what's going on there. I'll unhighlight these now. And what else did they do? They sold a put at $50. They sold another covered call at $58. So if it's trading at 53, they don't think it's going to go to 58. And they collected $1.07 per share there, 6,000 contracts. They also bought a put, a downside protection at $51. So the net of that was it cost them $672,000. They still are in the black at 2.8 million in options credit. Figma is still down. They've lost about 7 million on that trade. Total P&L is negative 4.3 million. So another unprofitable trade in this space, but there is still room to play around and add some more premium on there. And if Figma remains fairly flat or goes up, this could turn very profitable. And then last trade of the day is just Lucid. Not too much to go over here other than that Lucid is now trading higher than what Ulti paid for it. They bought it at $24.27. It's now trading at $24.77. So they've got 1.25 million in upside. It's getting close to $25. So they might get 1.8 million, and they've got their net credit locked in at 650,000 for a max profit right now of 1.9 million. So we just want to see Lucid get up to 25, and we'll be happy campers. All right, everyone, that's pretty much the update. 12 winners on the day, 10 losers, 52% win rate. Great to see the quantum computing ones going up. HIMS, I think, could recover. I mean, the news, if it really was just the potential class action settlement and the new COO, then I think it could recover. Palantir as well. People just seem to love that stock. So I think these are going to recover as well. But we will definitely check in next week. Everyone, have a fantastic weekend and see you in the next video.